What's going on, everybody, and happy Friday. It's that time of the week. It's time for the Security Token Show. You know, Kyle and I, we've got the latest and greatest tokenization news for you. And my God, what a week. And a week away from Tokenized this, no less. So, Kyle, how you doing this week, my friend?
Herwig, I am really, really good. We have an awesome slate of news. We honestly have so much to cover here in this episode. I'm feeling a little jet lagged after a crazy week, not from travel, but from all of the news that has been going around in the tokenization space and in the macro economy. So I am so ready to dive into this episode and close out another amazing week in the blockchain world.
To be fair, Kyle, the news is around the world, so it does take us everywhere. But after that corny joke, let's get into it. It's time to talk about the biggest moves in the market this week, folks. Of course, with a special guest, as always, this time with repeat guest Emanuele Rossi. How are you from Mountain Protocol? Please, how you doing this week? Tell us.
All is good, guys. Good to be here again. Love the show. So happy to be a repeat guest and honored to be a repeat guest. Thank you for having me.
And are you excited for Tokenized this next week?
Very excited. I'm going to be on a nice panel with a few folks from the space. So we're going to have some good insights to share with the crowd and really enjoyed the conference from last year. I think this year is going to be even better. So yeah, very excited for that.
Yeah, we had to bring it to New York, man. But thanks for coming on the show again. It was a great week of news. Kyle and I had even some trouble figuring out, man, what are the hot topics we want to talk about? And an interesting one that I kind of want to start out with, actually, out of kind of left field, is what do you make of the crypto acquisition from Ripple acquiring Hidden Road for over $1 billion? You know, for one, this is now, I think, within the span of a year, the second unicorn acquisition. You know, Stripe buying Bridge for over $1 billion. Now Ripple acquiring Hidden Road for $1 billion. For those who don't know, Hidden Road being a major crypto broker in the space. What do you think about this, Kyle, Emanuele? Any thoughts on this news?
Yeah, this is a huge acquisition, $1.25 billion. Ripple is just flying. They're feeling pretty good, presumably, with their SEC case looking like it's heading towards a settlement. I think the SEC and Ripple both filed the injunction to say, look, we need a little bit more time. Let's pause the suit so that we can figure out a settlement. So they've wasted no time to then deploy, $1 billion plus into a new acquisition. So clearly they're not hurting for cash in this market. I think it makes sense. Herwig, you and I have both called this for years, that a lot of these broker-dealer licenses are going to get swallowed up as we see consolidation in the market. And it's interesting to see how active are they going to be in tokenizing primary offerings. They certainly have a lot of money to potentially underwrite. This could be a second coming of new tokenized assets with a serious liquidity provider behind it. And so I think there's also probably gets the wets the whistle of a lot of existing broker dealer and ATS licenses in the US that I know have been trying to fundraise, trying to get active. We now see Archax getting involved. Now we have Ripple getting involved in the broker dealer space. I think you're going to see more of these types of acquisitions from potentially some of the friends of the show over the last couple of years that have been actively building in the licensed and regulatory space.
Yeah, it's very exciting. I'm thinking about it through the stablecoin lens. Ripple has their own stablecoin. I think it's called RLUSD, I believe. And, the game for a stablecoin provider, it's really to build a network of liquidity. And you can try to do it organically by embedding the stablecoin in existing marketplace use cases, whether it's DeFi, CeFi, or fintech payments, TradFi, whatever it may be, or you can play the game of the acquisition, which is happened here, and you buy an existing marketplace and plug your product and your technology into that existing marketplace. And I mean, Hidden Road is definitely one of the leaders when it comes to prime brokerage in crypto markets. They have an extremely solid team, very TradFi focused, and you only hear good things about them when you're speaking to market participants. So smart move. The idea long term is to migrate Hidden Road operation over to the Ripple ledger, and specifically to start settling transactions and a variety of operations using the Ripple stablecoin. So again, a very interesting move. Key is execution, of course, like always, and migrating, all of these operations over to the Ripple ledger. But we'll see what happens there. I think something that is interesting is what happened to the Ripple token, right? Initially, I think many of the transactions or products that were being built and offered by Ripple relied on XRP as a settlement asset. They have a very large footprint within the cross-border payments business. I don't know exactly how much numbers was moving across those rails, but XRP was the token for all different type of financing, transactions, and so forth. What happens now, right? That you have a stable coin that is a better settlement asset, arguably, that is more easily integrated with traditional rails. Well, TBD. But yeah, definitely an interesting acquisition, and we'll see how things play out.
No, I'm excited for Ripple. A lot of people don't acknowledge them as one of the OG RWA companies. I do. I've always seen them as sort of seeing this as the future. And now they are doing it the way that the market has conformed, right, around stable coins as the main product. But we're going to move on to tokenized stocks, because there's some pretty big news from Facet, Own, and Dinari, who are saying they're tokenizing $1 billion in U.S. equities for global investors, all around the world. Own is a Ethereum layer 2 protocol, okay? So Dinari, of course, is the platform behind enabling the transaction of these tokenized stocks. They've been doing it for tons of other stocks for a while now. And I guess backed in there is also Facet helping power all this. So $1 billion in equities coming to Own through Dinari. Any take on this? This is supposedly a massive increase in the size of tokenized stocks. We know RightRock has traded over 100 million, almost 200 million in volume of tokenized stocks. We know, Bakkt and Stoker and Swarm and many others are getting into this game. Heck, maybe even Coinbase, which, Emanuele, you've got some love for since you come from there. Any thoughts on this big announcement, $1 billion in tokenized stocks now in the game?
Yeah, I mean, my thoughts are it's all about distribution and real adoption of the assets, right? We've seen $1 billion private credit deals put on the blockchain. Yet, what's going on with those assets, right? I think everyone in the space is thinking, how do you unlock secondary market liquidity? How do you unlock additional distribution channels for a global audience? These are really the goals of tokenization in many ways. TBD on whether this is just going to be a technology play, right, where you're using a blockchain ledger to issue assets and to distribute them somehow on a closed ecosystem, or whether there is going to be more permissionless integrations and distribution. For stocks specifically, many companies are working on them, like you said, Herwig, but again, how do we get them to be utilized by the market? I think a clear play is the fintech play, where companies now all over the world are building neobanks and applications that have access to dollar accounts, to savings accounts, to all forms of yield. Well, now through these type of players, they also have access to stocks. So TBD on what happens there, but certainly good to have more people experimenting and play around with this asset class on blockchain rails. What I'm interested in seeing is any type of arbitrage or market structure dynamic taking place between all of these different tokenized stock providers. What's going to happen when you have 10 different forms of Apple on the blockchain with permissionless token? Are there going to be opportunities for sophisticated players to come in and make money out of that? But yeah, certainly interesting.
Yeah, it's interesting, Herwig. I have a question back to you, and I don't necessarily have the answers here, and I'd like to do some more research probably on my own to figure it out. No pun intended, I guess, because we've got own here in the headline. But do you know what structure they are using to actually tokenize the shares? Because, like, I think that when I think about international stocks, they use like advanced depository receipts. They use other kinds of like almost like a debt or like a safe note style of thing that acts as the vehicle with which you trade that then can convert into the share. I know there's a lot of restrictions around who can own stocks and like, maybe is there, like if you own more than X amount percentage of a public company, it needs to be publicly filed for. So I wonder how all these things fall into play with these types of tokenized stocks, because I don't believe, I would be really impressed but surprised if like Nvidia or any of these actual companies, Tesla, was the mandate behind this, right? Presumably this is Facet known in Dinari tokenizing these shares, so they sit in custody somewhere and then they're issuing some other vehicle with which it acts as a proxy to those shares. But I'm just not totally sure what that structure looks like. I'd be interested to know what are the realities with those types of structures? Are there clawbacks? Are there, is it actually one-to-one? Is it instantly redeemable? Is it, quarterly redeemable? Is it never redeemable? Like some of those things I think are really interesting. And I don't have a lot of insight into what that looks like yet. I think that's going to be a growing question mark just from a risk evaluation perspective.
No, I think you definitely have to ask those questions. I think, you probably can hopefully answer those on the Dinari platform. I think Dinari is the one. I don't want to be their spokesperson, but OWN seems to be just a blockchain layer. I imagine a lot of this is coming down to Dinari. We saw in the past how, through, I think it was CM Equities or something like that, in Germany was powering a pool of almost a dark pool, since we had no insight to how much was actually behind the tokenized stocks on FTX, for example. So it's a completely fair question, Kyle. That's why I read this headline and to Emanuele's point, it's like $1 billion has been tokenized. Is that the pool, right? That now people can go and trade, or is that people actually trading $1 billion in tokenized stocks, right? What's the actual activity? And maybe this is step one, right? Get $1 billion in float for these tokenized stocks and grow from there. Let's see if we can get Dinari on the show and find out, right? So we'll get back to you on that for those who are listening and watching. But another cool development I'd love to share with you guys. As we know, very prominent rating agencies have been getting into the game of rating tokenized products, as they should be, right? These are investment products, none the different than their old traditional counterpart, other than them using a blockchain to be administrated, right? And that means efficiencies and benefits, but also potential risks. And that's what a rating agency is also potentially looking out for, right? In this case, Moody's has done what I think is the first ever downgrade of a tokenized fund. They've rated 3 different products to date, apparently. And according to this article on Ledger Insights, those guys always do great work, Moody's downgraded the TBILL product by Open Eden due to concerns over the co-founder leaving due to some, allegations and problems that happened last year. So it seems that, just because you have great technology, potentially great backers, et cetera, everything gets taken into account here. Looking at the ratings here, it went from an ABF down to a BAA-BF. For anyone who is interested, highly recommend you go check out the Ledger Insights article. What do y'all think about this one?
Wow. Well, go for it, Emanuele.
I would say a treasury fund or a treasury money market fund is a pretty vanilla product to run. So, credit ratings there shouldn't be too further down the risk, let's say, spectrum. That said, whenever you're running a transaction or going through an onboarding process with a sophisticated institution, Management changes are always coming up as questions, as those could impact business operations. So I do agree. I think that's potentially related to what you were discussing, Herwig. In terms of Moody as a whole and their operation in digital assets, I was actually last week in their office speaking with the Moody's team because they were organizing digital assets bootcamp for all of their senior analysts, and the idea behind this bootcamp was to educate them around, stablecoin, digital assets, and all the great technology that we are working on and discussing. I think they have a lot to do in the space, right? Especially if you're thinking of all of the different structures and ways in which products are brought to market. I mean, you were just talking about it for stocks, right? What is the construct used to bring these tokenized stocks to market? There is a lot of dissecting and analysis that Moody's needs to do and could do. The reality is, where is the money, in my view, right? Like, who is going to use this product? Who is going to pay for the data and for the credit rating that Moody is generating? Is there a market big enough for that at this point in time? Nonetheless, we know that we are headed there, and it's the future of finance. So I think it's important for them to acquire the skill sets and the know-how to analyze and understand the risk associated with this product. And I think one of the clearest example, again, is stablecoins, where you have these dollar assets and they're supposed to be stable and worth $1, but the reality is that you have thousands of different structures and products being brought on chain through this dollar proxy. So what is a stablecoin, right? Is it a hedge fund strategy? Is it a private credit strategy? Is it a bunch of treasuries in the back? Well, it seems like that's what Moody's should play a role in and providing more clarity on. So it's exciting to see them getting more involved. It's exciting to see them already raise some funds, and there's going to be more coming from them.
I agree with that. I think that, to keep it short here, because we're doing a good time here on the segment, I do think it's interesting that yet again, the criticisms of a tokenized product actually have nothing to do with the tokenization itself. Whether we've seen this in previous, situations where, whether it was FTX, whether it was a lot of these different lending, companies that were doing all kinds of crazy stuff. Like, it's usually the human element that actually is what's causing the risk factors to change over time. And that's some of the beauty of evaluating credit risk of tokenized products, is that it is much clearer, the path of where these things go from a mechanics perspective. It does allow you to simplify a little bit more and think, okay, if all of these things, check out from a mechanics perspective, now all I need to really do is evaluate the leadership team and their strategy moving forward, as well as maybe a few other factors around how liquid the product is and some of these other things, maybe rates and redemptions and things like this. But a lot of those things are going to be relatively consistent. So the main factors are just going to come down to that human element. And I think that we still are a long way out before we're going to fully disintermediate the human element from a lot of these things. You're always going to have that component. So I do think that this is very interesting, but I don't see this as a huge headline or indictment around anything that we're working on from a technological standpoint. In fact, I actually think it emphasizes the value of the technological standpoint, because you can more effectively evaluate some of these other factors that could theoretically have a much bigger impact on the long-term viability of a product.
All right. Well, I also agree with both of you completely. I think this is just the market doing its thing, growing up, maturing. I love to see it. I know we're running low on time, so one more piece of news for you guys here. I thought this one was pretty interesting. I want to put a spotlight on it. Plume has been on a tear when it comes to ecosystem partnerships. I think just this week they introduced Matrix Stock, introducing their gold products on Plume. 18 million testnet accounts, supposedly. Now they've announced a strategic investment, 7 figures, no small sum, from Apollo Global Management, right? $500 billion mover here. That actually announced their private credit fund, a CRED, on Securitize at the beginning of the year, or no, a couple months ago only even. Around the beginning of the year, a CRED. Anyone have any insights on this one to end off our market movements? Is this a market movements? Apollo continuing to say, A, I'm getting deeper into the game, and B, making a strategic investment into Plume?
Yeah. Thoughts here, but Emanuele, you can go first.
No, please, Kyle, go.
Well, I just think it's interesting, for people that you've heard the name 1,000 times, but Plume is a layer 2 blockchain. So anybody that's confused around terminology or asks why or what's the viability of a layer 2 versus a layer 1 or any of these questions, certainly at least it doesn't matter to Apollo. And so I don't think that there's too few or too many of these different blockchain solutions. They all accomplish different things. And I think that some firms, look at a layer 2 solution or a new blockchain protocol as more of a white glove service versus what exists on an straight up Ethereum. You might not be getting a ton of development resources. Whereas if you work with a layer 2 that's well funded, that has developers, that's working in your particular niche, perhaps you're going to be able to get a much more involved development process. And for some of these shops, that's really what matters to them, right? They know they've got the buy side, they know they've got the sell side. All they need to do is make sure this thing works correctly. Kind of the opposite of the comments I made regarding the Moody's article. They're mostly concerned about the tokenization. They're less concerned about some of the financial structuring and the leadership stuff. So because of that, they really want to work with a team of developers that can build those things properly. And that's where I think you see a lot of viability around building layer 2s. And that's certainly some of the conversations that I've been having with other firms as well. Apollo's no joke, though, y'all. I mean, $700 billion in AUM. They are a big shop. They do a ton of private credit. I still think this is going to be a huge market moving forward, especially with all of the craziness in the market. I think that institutional lenders are going to be more and more strapped for cash from a liquidity perspective. I think you're going to see a lot of that capital actually coming from private families, from larger institutional credit funds like this one to provide lending. And especially with the growth in the treasury products market, I don't think it's going to be that big of a jump to go from that into something that's slightly more risky, slightly higher up the risk curve, but still, pretty solid to generate yield on underlying treasuries and to be an institutional product for stablecoin and money market fund issuers. So I think that this is very bullish that Apollo continues to get involved. This is not their first step. And so many of these huge funds are getting involved that it's definitely too big to ignore.
Yeah, I agree. And I have quite a few thoughts here. Is it possible, guys, for me to share my screen by chance? Can I just click on the present?
Yeah, just go for it. Should work.
Okay.
Bring it up. Show and tell.
So there is this one slide that it's probably one of my favorite slides. And I don't know if you guys can see it. But let me know.
Yeah. We're loading.
Here.
Might be loading, but let's give it a second. So I think about it from Apollo's perspective, right? Like their goal is really to get access to all of these differentiated sources of yield and to create interesting opportunities and products for their customers. Now, traditionally, private credit was, again, middle market sponsor lending, as we can see on the left side of this slide. How has private credit evolved over the years?
Wow.
Well, is now the ability to finance a large variety of opportunities ranging from, again, fund finance to rental car finance, right? These are all private credit opportunities, and Apollo wants to be involved in all of these different parts of the market. This, by the way, is a slide from their own deck, so I'm not inventing stuff. And, what is the blocker in having a massive institution like them being disinvolved? I think just access to all of these opportunities and all of these funnels, let's say, and tokenization in some ways give power to local specialists to underwrite risk and find opportunities and bring them on the blockchain. So I do think that long term a company like Plume and related underwriters living on Plume could help a company like Apollo with access to all of these varied opportunities, essentially becoming part of their broader platform.
Right.
Again, it takes a lot of due diligence and just understanding of the market, technology risk, and so forth. But again, in my view, tokenization gives you the opportunity to expand that right side of the chart. Now, what is going to be reality and what is not going to be reality, again, we'll see. Apollo was involved pre-FTX in the blockchain as well, and then I think they put everything on pause, and now they're back in the game again. But they have been around the space and they've been present, so that's clearly a good signal. Regarding Plume, I think what's to be determined is, again, execution. What's their end game? Are they going to have vaults? They're going to have vaults where people can come in, deploy capital. Who is the target customer for these vaults? Is it going to be crypto native people? Is it going to be institutional partners looking for diversified sources of yield? How are they going to attract the TBILL and AUM into these vaults? Clearly, they're taking a more crypto native approach. I would expect a points program and other ways to basically incentivize yield farmers to come in and deploy capital in here. So a more, again, crypto native approach, but down the line, what's the idea, right? Is it going to be more TradFi integrations with, asset managers, family offices, RIAs or whatnot? Like, how are they thinking about that? TBD, because the crypto native pie, it's only big enough at this point in time. You eventually really need to break into the institutional finance business in order to have substantial inflows. But nonetheless, super interesting, big fan of both teams, and I will see what they can do.
The chess moves are playing out right in front of us, folks, as we see big old TradFi get into the tokenization game, picking investments into strategic infrastructure here. I love to see it. Thank you so much for your insights this week, Emanuele. I can't wait to see you next week in person. And don't go anywhere, folks, because we got a ton more amazing tokenization news to get into, including an interview with Ken Burrows from KINLUX. So see you later, Emanuele.
Hello, everyone. Welcome back to Security Token Show Interviews. This week we have Ken Burrows, founder of KINLUX. Ken, how are you today?
Good. Thanks for having me.
Absolutely. Thanks for coming on. So you guys are doing some interesting stuff. You guys are tokenizing real estate, but not just any real estate. This is vacation homes, vacation destinations, as I understand it. I know you have an offering live, and we'll talk about it soon. But tell us, Ken, real quick, on a quick 2 seconds on KINLUX and maybe what these vacation destinations are that you refer to.
Okay, well, yeah, we've built quite a good niche here around the vacation rental community with residential vacation rentals. However, due to municipalities and government regulations, the residential side is starting to phase out, and a lot of resort destinations are all across the world, really. So we're coming into the commercial market now, starting to create more exciting and adventurous properties for renters to have an experience with. And we want to do a household name named KINLUX, family and group rentals. So
I like it. And this is interesting, right? Because you get to tokenize a little bit more on what the exciting adventure and prospect of what the property can generate in terms of the business, right? Because it is a vacation rental, as you mentioned. But of course, appreciation of the property itself. I want to pull up one of the images here that I found on your website, just so that people have a better understanding of what the properties are. But can you describe a little bit more about like what this is right here and who would possibly be renting this?
Well, like I said, we're mainly for, the larger families or groups that want to come in and have an experience. So, each property is going to be completely different, unique, have different aspects of entertainment. Of course, all the games, pool tables, shuffleboards, foosball tables, maybe even arcade games, things that just for the family to have a great time with, large kitchens with all kinds of cooking utensils and things so that they can enjoy their family, with their kids, their cousins' kids. And just have a great time. I mean, we're also looking at doing some things like a Hobbit village where they sit around and kind of walk in like a little Hobbit. Each little maybe 8 to 10 units with a fire pit, miniature golf course. So those are just some of the ideas here that we're going to be, bringing to fruition as we grow.
Those are really cool, and I saw that image or rendering for with the Chicago skyline there. So I'm a little biased. I like it. I like it a lot. It's a good look. But let's dive into kind of the offering here. You guys have a $1.2 million RegCF going on right now for this segment, right? Luxury vacation destinations. Now, for anyone in the audience not aware, RegCF does mean that it's open to retail investors as well as accredited and above, right? So tell us a little bit about what your goals are here, Ken, in the offering and what you're looking to expand into as KINLUX.
Okay. Yeah, we're starting off on just the RegCF, and we're doing something a little different. We're merging crypto into real world assets. So we're trying to touch base into the actual crypto world. I believe now we accept 20 different cryptos for investments.
Wow.
But each crypto or coin will actually give you a share of the business. So we're starting off with a CF. We are jumping up to the 5 million here within the next probably month. And then we're going to file a Reg D for accredited investors, and then eventually Reg A probably within a year. So that way we can start hitting up in the $75 million range, doing larger projects, more unique projects, things like that. So that's kind of where we're heading into. Like I said, trying to merge the crypto in with the real world assets. We believe that's the wave of the future.
Makes total sense. And I love that both the asset is being represented through the equity token here, as well as the payment leg of the transaction. Also, you're accepting all these different cryptos. Very cool to see it all on chain there. Tell us a little bit more, because you're leveraging the blockchain here to get to know and know exactly who your investors are. Are there any perks for the investors that kind of come in on this RegCF or in general throughout your process here? What can investors expect to gain here as well?
Yeah. After a year, once the CF is over, we're going to have different levels of, depends on the investment that they come in with. They'll have discounts for the properties, that they can stay at for life. As the company grows, then we'll also have different systems where they can vote on certain aspects of the properties, what properties we're going to do, even different unique aspects to each property. We might have 3 or 4 different layouts for the actual property we purchase, and they'll be able to vote on that. And that way we kind of get an idea more what the investors are looking for and more people are looking for. So you're going to be a part of the business. We are going to be a club type of system. So the investors will be part of the club and the family. So
I like it a lot, right? It's a little bit more that exclusive feel, and as well as actual stake into the projects themselves, right? So it aligns well. And I love that there's a governance component too. You're kind of starting to tie in a little bit of that DAO model there to the business here. And you mentioned that they do get a piece of the business, right? It's not just the real estate. So it's a revenue share, it's the real estate. It's, I think, really cool that you're doing both of those on chain here. What do you predict the future of tokenization, and specifically in the real estate space, will look like? Where do you think we're going to be in a few years?
I mean, I definitely see it as the wave of the future as governments and different larger companies like ourselves start getting into the governments are looking more for reserves for crypto itself rather than, gold and other securities. But like I said, I do believe with other companies coming up the chain too, that we're going to be a front runner in the actual securitization of real estate and merging the two worlds together with the real world assets and tokenization.
Do you envision in the future maybe having a structured product or a combined product with multiple, pieces of real estate, or maybe focusing on certain regions, given that you're kind of expanding to different areas here with the vacation rentals?
Definitely. Yeah. We want to become our own niche. Not sure if we'll ever get as large as the Hilton, but we want to have a name recognition, have a full list of properties all across the world, and all unique properties, fun for that large group and large family, probably in the range of anywhere from 15 to 30 people to stay at and have that great experience, like a mini resort in a way, but also have a more homey family feel to it.
Very cool. Awesome. Well, thank you so much, Ken, for coming on. This is a really interesting project. And again, it is a RegCF. So it's been a while since I've seen a RegCF come through on the tokenization side. So this is really exciting. Ken, appreciate it. We're going to move on to the next section of the show. Thanks for coming on.
Thanks for having me.
What's going on, everybody? It's time to get into our latest update on the RWA Foundation. Our initiative, of course, to get RWAs into the hands of crypto natives to bridge the communities. Okay, we see a huge movement happening with tokenization, and we know the future in DeFi is RWAs. We want to help make that happen by focusing on crypto natives exclusively with the RWA Foundation and the Wally DAO. That's right, we're launching a token, and you're going to hear a huge announcement. Many of us have been waiting for a long time now, so I appreciate your patience and your support, because the time has come for the big announcement next week at Tokenized This. That's all I can say for now. So hopefully you buy your ticket and show up for it in person. Otherwise, just get ready. That's all I can say. Let's get on with the show. Kyle, that was an amazing interview we just heard. Cool KINLUX offering. We can talk about that later. We've got more real estate news. And we had a great market movements, but man, oh man, it doesn't stop. It does not stop, Kyle. We have so much news every week to cover. So once again, I think I'm just going to have to run through some sections and you're just going to have to jump in and tell me which ones you want to talk about. Does that sound good?
For it. Ride or die.
All righty. Well, we're going to start off with a massive update on the financial institution side. All right. First, starting off with Taurus. Okay. Taurus has now announced the Taurus network, which is their interbank digital asset network. It features Credit Suisse, Deutsche Bank, Arabank, Switzerland, many others, Cassius, over 35 banking clients are in there as well. So this is a really big deal. I definitely want to talk about that a little bit, Kyle, but Euroclear also joined HKMA's Project Ensemble. Okay, they're looking on creating interoperability industry standards, which I think is a very interesting, great approach. Also, BlackRock tapped Anchorage for their own custody services for specifically RWA tokenization as well. And then Chainlink is now verifying reserves and doing the interoperability with their CCIP for Libre Capital's funds, which are, backed by Brevin Howard and several other products on there. Standard Chartered and OKX are doing mirrored collateral using Benji. I think that's absolutely awesome. All of this sort of out of U.S. shores, but using Benji as a money market fund token. And then last but not least, SEI and using the technology platform Control Alt have been applied and trying to tap into England's digital securities sandbox. That's, of course, the regulatory sandbox to encourage institutions and technology companies to tokenize with their support, under their guide. So, Kyle, let's talk about this financial institutions update, Mike.
Yeah, these are some pretty big headlines. I can just run through a couple of thoughts. First off, Taurus. I think that these working groups make sense, although the consortium model has definitely proven to be tough, just because of the fact that it is a little bit of a closed group style of system. And so you really need to make sure you focus on interoperability with other closed groups if you're actually going to get these types of deals done. I think this is going to be proving a little bit difficult with this network because I think they're on Hyperledger. So it's a private blockchain solution on Hyperledger, which just has not proven to be the most interoperable blockchain solution if you've tried to do any work building on top of it. That being said,
Zing.
If these 35 banking clients all have interest in just doing deals within each other, this could be a great solution. And it could be kind of the first step in getting a lot of these institutions onboarded into the tokenized economy. Sometimes you need to make those concessions in order to onboard those institutions and then over time slowly introduce them into other opportunities. So something to watch there. The other one that I was just thinking about is this BlackRock news, and BlackRock going with Anchorage Digital. So we know that BlackRock is using Coinbase for their Bitcoin ETF custody holdings. We know that Coinbase has an ATS and has had some level of interest in varying degrees of getting involved in the tokenized assets industry. And on the flip side, we also know that Anchorage Digital certainly can custody Bitcoin. And so it starts to bring up some interesting questions around, is Anchorage Digital and Coinbase, are they going to inevitably be competing over BlackRock's business? Or if they are going to segment this for particular realities. But I definitely don't think that Coinbase wants to lose BlackRock as a client. And I certainly would imagine if Coinbase gets involved in the RWA space, they're not going to be super gassed that Anchorage is the one doing a lot of the custody of some of these things, considering that's something they could easily do. So I think that that's something to watch over the next 12 to 18 months, is what's going on with Anchorage and Coinbase with respect to the BlackRock business, and how will that grow over time? That's, I think, the biggest thing that I saw from these headlines.
Anchorage definitely has a separate infrastructure set up, different licensing as well around custodying possible securities and other RWA products, right? So that might have given them an edge there over, say, their traditional partner in Coinbase there. But yeah, BlackRock is the one to win, right? So congrats to Anchorage there. And I think Taurus just proves that it's permissioned, man. It's like, this is whether you like it or not, and everybody agrees public chains are the end game. It's going to be a crawl, walk, run when it comes to bringing on TradFi. And so permissioned is absolutely, seeing these kinds of interbank networks or mafias or whatever, walled gardens, whatever term you want to use. They're going to form. They're going to keep forming. And it's going to be an interesting competitive landscape that develops. I'm excited to watch it grow. But Kyle, there's even more announcements from the industry, okay? We have a new token offering on Hydra X. On the Canton network. Okay, this is the first tokenized structured product to go live on the institutional grade blockchain that is Canton network, developed by Digital Asset. We actually had Yuval, one of the founders, CEO, on last week on the show, for those who were there with us last week. And also Mantra, Kyle, announcing a monster $108 million fund to support RWA projects via an ecosystem fund, which they say is a global ecosystem fund, obviously with a Mantra focus, but they are really trying to support this whole industry, and we love that. Centrifuge and Wormhole have teamed up on their multi-chain supported tokenization platform, okay? Out the gate, all in one, multi-chain, you've got it all. With Centrifuge and Wormhole here. Let's see what kind of customers they attract. And finally, Kyle, M0. This is the agnostic, stablecoin middleware platform, if you will, that was on Ethereum, now supporting Solana. We're seeing a lot of movement towards Solana when it comes to infrastructure, especially for RWAs. And they announced already a client, Cast, Neobank, plans to be using the Solana-based M0 stablecoin solution. So any takeaways here, Kyle?
Look, certainly we love funds. We love people that are investing buy-side demand. That's always consistently been the biggest problem in tokenized assets historically. So the more that we can bring in buy-side is wonderful. So love to see that for Mantra. Hopefully they can continue to grow that. And the other ones, bringing stablecoin middleware to Solana, I think is nice. I'm interested to see what Solana looks like. I mean, I haven't heard a whole lot from them post meme coin frenzy for such a big blockchain. It just still feels like they haven't quite cracked the code on the RWA tokenization stuff versus a Canton that I just think is continuing to crush it. So I love that they're doing structured products now. Really cool to see Hydra X getting involved there.
Don't sleep on Solana. You got Securitize and Ondo supporting now. You got PayPal's USD that ended up launching on Solana as a stable coin. It's no small player at the end of the day, so I'd keep an eye on, folks. But moving on, also, Kyle, in the real estate section, there are some news. Dubai's land department, okay, their government agency here, is officially going to use a real estate registry on chain. This is what we were talking about in our tokenization report for the future, okay? Trillions, and actually tens of trillions in real estate are coming on chain because of the underlying registries. They themselves will start to use DLT, and it only goes crazy from there. Zodar to launch a tokenization platform and a token corresponding with it next week, April 15th, the day before Tokenized this, next Tuesday. So keep an eye on that launch. We've got another player in the game, so welcome Zodar. And, of course, I endorse and love a token model corresponding with that. eState Global themselves are also launching tokens on an international platforms, EST tokens. Okay, so eState Global also focused on real estate. And, of course, we heard just recently in that great interview with Ken and Jason about the KINLUX tokenizing vacation rentals. So real estate making a little bit of a move here. Kyle, any thoughts?
Yeah, look, I think the Dubai government taking leads to link the registry to the tokenized asset is awesome, because this is kind of the exact premise of tokenization. So you can bring in this metadata and tie it to the financial asset, whether that's the supply chain of a product or accounts receivable, whether that's the title and ownership on a real estate property, whether that's a variety of other things for different types of assets. This is exactly where I think tokenization can shine, in addition to, the automation of the financial process. So I like that they're doing this. I like that it's government led, because that means that it gives clarity to companies and issuers. We've seen companies just like Proppy here in the US doing work just like this. So I'm sure that they're pretty psyched that that the Middle East is endorsing this process as well, because it does drive adoption to the space.
We saw California's DMV do it with, car titles and such. We're going to see it with title registries, folks. It's just going to happen. Okay, and there's two more reports worth sharing. Ripple, this time coming in with a prediction on tokenized assets, because once again, I'm telling you, they're all about RWAs. They're predicting 18 trillion by 2033, Kyle. As you know, STM predicts 30 to 50 by 2030. And it's worth mentioning that StanChart predicted 33 trillion by 2033 or something like that. What do you think about this prediction, Kyle? 18 trillion.
18 trillion is low. There's no way that it's only 18 trillion. I think that's bearish. I think that we're going to see a huge flow of private credit. I think that that's going to be an awesome market. And then you've got all the other real estate, you've got all of the other equities. And then, of course, I've been so bullish on commodities, which is a multi-$100 trillion industry alone. So I do think this is low. But again, if this is the low bound, then we're in for a really successful development in this industry. So I guess that's the silver lining.
Still significantly larger than crypto markets are expected to grow to by that time frame. So it just goes to show you the flippening is coming for sure. But yeah, my message to you, Ripple, is get more bullish. One more report, okay, that's worth checking out. Ledger Insights breaking it down, doing a great job. Once again, Broadridge with their repurchase agreements, their repo transactions, which they do 1.5 trillion a month on their platform. Okay, they are now having a cool partnership with Finality, which of course has their tokenized cash solution. They're doing some cool things with collateral and other use cases. So check that out as well. But what a week in news, Kyle. You know that what that means is we only have one thing left to do, don't we?
That's right. The favorite part of the week. Let's do it. Oh, yeah. The final segment of the show, the best time of the week. This often has been compared to the Oscars, to the Grammys, to the Tonys of the security token industry. That is the most important awards in the entire industry, what everybody craves for. But unlike Oscars, unlike Grammys, unlike Tonys, there's only two that get awarded per week and only one that gets awarded per year. That, of course, is the Companies of the Week and Company of the Year award, which Herwig and I nominate two companies every episode of the Security Token Show that we thought deserved a little bit of an extra spotlight. We're doing something particularly innovative or exciting or incredible in the industry. We've been doing this 280 shows running, and Herwig, it doesn't stop with my enthusiasm. I cannot wait to hear who you've got for your winner this week. How are we feeling?
Kyle, it was a great week, man. Like, so much good news. It was very difficult to make a decision, whereas, a couple years ago in the pre-100 episode days, let me tell you, it wasn't so difficult sometimes. But now I really had to dig deep. And I got to say, I'm feeling a little institutional. Maybe it's because we're going to New York next week. I don't know. We're about to go schmooze with a bunch of the big Wall Street folks. But no, I actually have to give it to Taurus, okay? Not only because of their new interbank network that they announced with over 35 partners. I think that's absolutely awesome. All institutional. We also know that State Street ultimately selected them as a partner. Taurus is out of Switzerland, I believe, right? They are making moves over there in Europe. I think they're going to be one to watch for sure this year, next year, and many years to come. Do not sleep on Taurus. You're my company of the week.
It's a great choice. I'm really excited for this one. 35 different institutional counterparties here, all working together, building something together, as opposed to having everybody working on things separately, right? Let's bring everyone together. Let's say, look, we are here to do deals. We're here to finance opportunities and bring products to market. Makes total sense.
Just put it on chain, man, and put it to work.
That's right.
There. Kyle, who's your company of the week?
Well, Herwig, I have always been fascinated by the stock market. It's what built my financial expertise. It's what created me as an entrepreneur, often gave me some of my initial capital to work on business ventures as I was a kid. And so because of that, I've always had a soft spot for tokenized securities because of the fact that was my background. And I knew the public markets much better at the time. And so I've always been waiting for tokenized stocks. It's been a fascination of mine back when it first was a thing, when a lot of these companies were trying to do it in the last cycle. And then unfortunately, they fell apart, despite the fact that we were doing all kinds of reports on it and I was gassed about it. So for that reason, I do want to highlight Dinari, that's bringing $1 billion worth of tokenized stocks onto the blockchain. They're working with a bunch of great partners in order to do that, including Facet and Own. I did bring up a couple questions I had in the top segment around how these things are structured. I'm excited to speak with their team and learn more about that. But I think that this is going to be a key tokenization opportunity. So many people love investing in cryptos because of that huge 100x opportunity that you just don't necessarily get in real estate or in debt or in some of these other tokenized products. Even private equities and startups, they don't often move like that in a short period of time. It's often a long time, long duration investment, whereas buying MicroStrategy, buying Tesla, buying NVIDIA, these are opportunities that I think do offer that same kind of, it scratches that same kind of gambling itch that you think a lot of retail seems to have these days. And so because of that, because it's something that people understand, they know, I'm excited about this one. And I think Dinari gets a lot of credit for doing it.
Building out the on-chain Robinhood of the future is bound to be very successful, is one way to put it, but not the perfect way to put it. Dinari is doing so many amazing things. Great choice, Kyle. Love to see it. I'm excited to be tracking this market and seeing where it goes. Clearly, between all the other players that are also entering into it, it's no doubt that tokenized stocks are going to be a mainstay trend for this year and years to come.
Absolutely agree, Herwig. And that's our show for the week. It was a bulky one, but I think we ground through it and got it all done. And the only thing left to do is prep for Tokenize This.
We've had longer, so that gives us more time to get into it, because that's right. There's still time, folks, to buy your ticket and show up. It's going to be amazing. Hundreds of pioneers across the crypto industry, tokenization industry, as well as, of course, Wall Street. The folks who are leading the digital asset divisions, the innovation divisions, those who are exploring and using tokenized products already. This is the place to come meet them. This is the place to learn from the leaders on stage and off. And if you're new to the game, come to our workshop. Let's accelerate you from 0 to 1 immediately when it comes to tokenization. I'm excited. I can't wait to see everybody in New York next week. Kyle, any closing thoughts?
Hey, look, always happy to be here. I'll be speaking on a panel Wednesday morning. Really thankful to the STM team for giving me that opportunity. We're going to crush it. And you'll certainly see me all the days during the conference. So excited to meet with some fans of the show and some innovators. And I'll definitely be bringing a couple of signed copies of the book. So make sure you find me. And let's see, I'll try to think of like a keyword. How about if you tell me the word, somebody says the word, the first person to say the word pineapple to me gets a free signed copy of the book. So do that in person and you'll get yourself a signed copy of Blockchain Explained.
I don't know what you might be implying with that code name there, but I don't know. Pineapple. Good. Let's see who wins. Folks, I cannot stress enough how big these announcements are going to be next week. So you better be watching more better if you actually show up, because trust me, you're going to benefit from it. So I hope to see everybody there. With that, that's the show. Can't wait to see everybody next week. And with that, happy tokenizing.